I'm Michele McGill. My background started out at Davis Dyer Max, October the 5th of 92 to be exact, so it's almost 32 years total. And my background started in personal lines. So the personal lines background enables me to communicate with our condo and townhome owners on what type of insurance they need for their inside, because, you know, obviously it varies. And then I later transitioned, well, a year later, transitioned to commercial. And when Perry Max passed away, they made me a producer and said, you know, you're already dealing with management companies, you know these people. And so Larry Houston, who was one of the partners at the time, he basically started taking me to all these little board meetings, and that's the kind of thing that I didn't do. You know, I did the behind the scenes where I got the applications from the property managers, which I'll send John a supplemental that you can fill out. So if you have new communities you want to get quoted, I'll want that completed. It's just a 1 or 2 page basic information. And that way it'll give me a picture of what we're dealing with, what do we need to cover. And with that being said, we call this the Big Six. So that's 6 coverages that we feel like is important to every association. And I'll send John this, it's a PowerPoint display. So the Big Six is gonna be property insurance. What kind of property are we going to cover? Are we covering a single family HOA that just has amenity items? Are we covering buildings? And what are we covering? So the Big Six is commercial property, general liability. So general liability would be for common areas. We have pools, playgrounds. You want general liability to extend over to that, where in general, the common area coverage under general liability will extend to the entire community. So you've got a community, single family that has 100 homes, well, we're giving general liability to all of that, but only for the common areas. So we're not covering their personal exposures. We're not covering, you know, their front yard. Someone slips and falls in their front yard or in their home, we're not covering that. And so it's commercial property, general liability, crime, which is employee dishonesty, theft, theft of money. Some lenders refer to it as fidelity coverage. And there are some rules that go with that, like if you have, I believe it's 20 units or more, you're subject to Fannie Mae and Freddie Mac. You know, they require, I think it's 3 months worth of dues plus reserves is how the formula they came up with how much fidelity coverage you need. So a lot of times you'll send a new community and, well, I don't know how much coverage they need, you know. And so sometimes if it's a small association, we may start out with a simple limit of 50,000 or 100,000, and we can always build on that later on.
I've always had problems with the fidelity coverage of the crime policy because our boards don't have access to the funds.
Yep.
On most
accounts.
Yep.
And so I've always had issue with that one because I honestly it's wasted money. But the FHA, VA, if you've got a condo with more than 20 units, they absolutely require it.
Yes.
And they will not let anybody buy a loan there, do a loan there.
Yep.
Under FHA or VA without it. So you've gotta basically swallow hard and pay the price.
And sometimes we'll have a closing on one unit, and the lender will say, oh, you've got 150,000 limit on your crime or your fidelity, but now the reserves are this much and the dues are this much, so we really require 200,000. So we may have to increase midstream on the limits. You can do that midterm, just for a closing, but it's gonna provide that coverage for the entire community. When it could very well be, you know, and we'll we will get a lot of pushback when it's just for a closing, but at the end of the day, they have to do it. So they're kind of forced to do it.
And you need to actually cover with your boards, that comment, that deal. Because more and more, we had this happen when we had another property across the street. They kept putting money into reserves because they were planning on replacing some boilers. And they kept putting money in reserves, and they kept taking the reserves
Building.
amount
Yes.
higher and higher. So it's like every 3 months, we were going back and increasing the amount of the DNO, or excuse me, about the crime. And they finally got to the point, like, we're not increasing this anymore. They can just not do the loans for all we care.
You're right.
So you gotta be able to explain that to your boards.
Correct. And I would say one of the biggest items we need on all associations is your directors and officers coverage. So even with our office, I do write a lot of brand new development for different management companies where it's a brand new association and maybe there's 100 homes at full build out and it's single family. But right now we only have 7 homes, and those are all pre-sold, and the developer's involved. And so what we do, we rate those based on how many they expect to have the first year. So when we get into our rating purpose, for rating purposes, we may rate this at 25 homes the first year, or 25 condo units the first year. But with the developer, they are automatically covered under the standard directors and officers policy only for their capacity as a board member. So we are not picking up their construction exposure. We are not, like, I've got a management company now insisting that we add D.R. Horton as additional insured
Wow.
on the general liability. Well, when you do that, that's not picking them up as just a board member. That's picking up their construction exposures, and I don't have one carrier at all that's willing to do that, because when you do that, you're picking up potential construction defects. So there's that. So we will never add a developer as an additional insured. So this particular management company had another agent that do a certificate and added them without the knowledge of the carrier, and I got an email from the carrier saying, no, we will absolutely not do that. So your directors and officers liability is going to pick up coverage for your board and volunteers that might be committee members. So for instance, I live in a single family HOA. Maybe I volunteer to be on the landscape committee. So they are going to be covered under all of the policies that we typically write, your standard policies to Philadelphia, Travelers, Chubb. That's part of the coverage. It's gonna pick up all your committee members and volunteers. And the purpose of the directors and officers, you're gonna pick up coverage like breach of fiduciary duty. We have a claim right now where a homeowner is suing the board for purchasing a coverage that they feel like is wrong. This person feels like they bought the wrong policy, when in fact it really is the best policy through Princeton, and it's just not knowledgeable about condominiums. So I'll get into that. Now, workers' compensation, there's a policy out there that's literally $331 a year for $1 million limit. Later, past years, several carriers offered this work comp policy to HOAs, condo associations, where they do not have any employees, but they wanted to cover the volunteers. So like if I was a volunteer on the landscape committee and I cut my finger, I would be covered under this work comp policy only if I'm at the direction of the board, and it has to be in writing, like, we're gonna assign these 3 people to do this. Well, now, workers' compensation historically has never been structured to cover volunteers. It's only structured for paid employees. So the state came back on all these carriers that have this coverage and said, you're going to be fined unless you remove that volunteer endorsement. So now, it no longer covers volunteers, and it will not cover, say we hire a landscape contractor to, mow the common area, and the landscape contractor gets hurt. You should be, as a management company and association, y'all should be getting what we call a waiver form signed, basically establishing.
Get workers' comp from them. Don't get a waiver. Don't get the waiver, get the actual workers' comp insurance.
Well, in the event they have no workers' comp, you can get a waiver form called a DWC 83 or 85 form. And basically that form says, we're establishing an independent relationship. The contractor is independent from the HOA, meaning we're not covering you, you're not covering us. The only item I feel like that would be beneficial under this small work comp policy would be if, let's say they normally mow, a board member says, hey, can you get up in this tree and cut the tree limbs down, and this contractor falls and breaks his neck, then they can sue the association for gross negligence. So under the workers' comp, it's called employer's liability, where you get sued. In my opinion, and I'm not an adjuster, if we got a contractor to do something they do not normally do, we're putting the contractor at risk. We're putting the association at risk for being sued. So your employer's liability could potentially come into play under that $331 policy. But just know that when we quote that, we're not really telling you we're covering these volunteers any longer. I always put a little message on my email, and it's on the proposal. It does not cover volunteers any longer. So you just need to make the decision. Do they want it, or do they do not want it? Because the last coverage, the umbrella. So a lot of people say, are we covered under the big umbrella? Well, umbrella is an excess layer of liability. So it sits over your general liability. In most cases, it sits over your directors and officers' liability, depending on the carrier, and your employer's liability. So say this person falls, breaks his neck, and we get sued. If we have an umbrella in place, it will sit over that million limit on the employer's liability. So even if you had $1 million umbrella, you've got an extra million that's sitting. So it doesn't go over property coverage. It's only on liability. It will never sit over property coverage. So if you happen to be underinsured and there's a claim, the umbrella will not provide coverage in that situation.
So the general liability, the D&O, the workers' comp are all liability things that the umbrella will cover. You mentioned the liability for, you were talking about subdivisions, I think, where like Northcrest, we have a swimming pool, but it doesn't cover any liability on the individual home lots.
Exactly.
So it covers the swimming pool and maybe the parking lot around the pool.
Yep.
For if somebody slips and falls, or somebody's running and horse playing at the pool and they fall and break an arm or something like that, the liability covers that, correct?
Correct.
In a condo, does it cover all of the areas since the condominium land is all held in common?
So we do cover the common area land for condo associations.
So corner to corner.
Yes.
Okay.
So we do cover that, and condominium associations are different in the respect that they are governed by TUCA, which is the Texas Uniform Condominium Act. And TUCA says we not only have to cover that building, at the very minimum we have to cover the original finish out of the unit on the inside. Now, a lot of management companies think the owners have to get all of their walls in personal HO6 policy. But realistically, if I have a condo association, I know without looking at their documents, we've gotta at least cover the structure and the original finish out. Most times, all of the condo associations that I deal with, that's all we're covering. So if there's any improvements, let's say you've got an older condo association, and I wanna change out my carpet for wood, well, that's an improvement. So even though we're covering the structure and the original finish out, if a homeowner has a water claim that, in our condo policies, Tuca says we're primary, but subject to the applicable deductible. So if we have a water claim, like a hot water heater burst, even though they have a maintenance responsibility for that hot water heater, if it floods all weekend long, then that's a claim that is going to touch that association. So that would probably be well over a minimum deductible of probably, most of these are coming in at 25,000. I've got some associations where the carrier says after the 2021 freeze, they're like, we will not do anything less than a $50,000 water damage deductible, because so many management companies said, turn that in on your personal policy. Then I saw a letter from one of our HOA attorneys to one of my management companies telling them, this event is not a lack of maintenance. It is an insurance responsibility as long as it exceeds the deductible. So all of these carriers like Allstate and USA, they pushed back, said, wait a minute, you've got a master policy. We're only gonna pay for our claim if it's less than y'all's deductible. And usually it's never less. It's always more. Cause I had one community, they had 200 units, and I think 60 had water damage. So it was a huge claim. So that's how the condominiums work. So if somebody calls me, I will tell them, I can't tell you how much coverage to get on your HO6. So under your HO6, I gave John 3. There's one called, it's basically condo all in, where we're covering the structure, original finish out, and improvements. Then there's one that I call just the shell. That's your typical building only. And that is where someone has to cover all of their walls in. So they have to figure out with their personal carrier, how much coverage do I need for everything? So that would be like a studs in, walls in, we're studs out. So they would have to get their walls in personal HO6 policy. And then original specifications is where we're just covering the structure, original finish out, and the homeowner has to cover the improvements. So I typically give these HO6 handouts as a guide, not really telling them a dollar amount of what they need for their improvements and betterments or their HO6, because we don't want to write those coverages for them. Even though we write the master policy, we want them to go to whoever writes their auto. Get your multi-policy discount. Even though they think it makes sense for us to quote it, I feel like it's a true conflict of interest, and I feel like they're better served just going to their State Farm. And so when I do these educational luncheons or Zoom calls, that's exactly what I'm telling them. Here's a guide. And the reason we want them to get these HO6 policies is in the event we have a fire and we have one building totally destroyed. You've got all these units displaced. Our policy does not pay to put them in temporary housing. A loss of use coverage is automatically covered on your personal, just like if you have a single family house, you've got loss of use coverage. So back in 2015, my neighborhood got hit with the tornado that hit the day after Christmas, and then a young lady in our office, she lost her home, 2 cars, and a boat. So her loss of use in her single family house ran out by month 7. And so she had to pay out of pocket for 2 or 3 months. So when you're displaced, you gotta go find a new place to live. You've got to bank on, it's gonna take me X amount of months to get back in my home. So I try to do these, educational Zoom meetings with these condo owners, so they realize it's expensive to live somewhere else temporarily. I've seen personal policies even pay a certain amount if you're living with a family member, but that's one thing we don't cover. We don't cover the homeowner's contents, regardless if it's a tornado, a fire. We don't pay for the contents manipulation. So if there's a water damage and their contents are all drenched, we don't pay to move that out. That's all on their personal policy. So if they don't have a personal policy, then they're up a creek, so to speak. So they're gonna be, I did have an association off Royal Lane in 2019 get hit with a tornado, and you'll always have some homeowners with no insurance. But because it's a condo association, we had to pay to put back builder grade. So even though we didn't pay for their improvements, so I did have one homeowner come up to me and say, because you did this meeting 3 years ago, I have the right policy and I've got enough insurance. But then you're gonna have, surprisingly, out of 200 homeowners, we had 3 owners with no personal insurance. And with the economy, first thing to go is your insurance if you can't afford your food and stuff.
We had that the other way around. We had a substantial fire at a property, 24 units were destroyed. And
5 years.
of the 24 units, of the 24 units, their
displacement was 5 years.
displacement has been 5 years, so they ran out a long time ago. But of those 24 units, 4 had insurance. The others did not.
And, because the cost of insurance continues to go up, even my own home, my premium went up $4,000 and I have no claims. 0 claims.
Wow.
Newer community, newer home, and I have family calling, well, can you help me on my homeowners? No, stick with who you have. But because, rates are so high, your deductibles are gonna continue to go up. And so even on the single family HOAs that we write, you're gonna see more and more carriers doing the percentage deductibles on wind and hail. So most of which, like AmTrust, we wrote a lot of single family with AmTrust. They have a special HOA program, and I've noticed that instead of just getting a flat quote with a flat $1,000 deductible, they may have a $2,500 deductible for all the amenity items like your monuments and all this, and then they'll do a 2% deductible for wind and hail. So that's not 2% of the claim amount, it's 2% of your total property limits. So this one, so they've got, AmTrust has these coverage buckets. They made the mistake of providing landscaping coverage for wind and hail, when landscaping has never been covered historically for other than fire, vandalism, lightning. So they covered landscaping on their single family HOA program. Well, now that's gone away. So if you get any renewal proposals from our office, we should be letting you know you had landscaping last year, but it's gone this year. Because I had one single family HOA for the 2021 freeze, their landscaping claim was over $200,000.
Yeah, you're sitting here thinking, what do you mean by landscaping? If it's a subdivision and they have all this beautiful landscaping, back then it all froze and we had to replace it all.
Every Indian hawthorn in the 3 or 4 county area died.
Yeah.
Yeah.
So, in the HOA's favor, they at least had coverage to replace that, where if it happens again, and let's pray it never happens again.
They said it's a once in a lifetime.
ERCOT, but it affected the whole state of Texas. So that changed everything for condo associations, deductibles. I feel like that's the event that created the havoc.
I would agree.
I believe, in one day, we had 200 claims.
Oh, wow.
In one day. That doesn't even touch our personal lines department for all the homeowners, you know, because you were crippled, you know, even us. Power went out, froze everything. We had, you know, pipes burst on our pool. We had a lot of swimming pool plumbing claims, but just know, you know, what you normally are supposed to cover on your HOA would be your common area amenities. Now, we can cover irrigation systems. You never know when a car is gonna drive through and damage it, but
You have to evaluate the deductible at that point though, don't you?
yeah, so if it's just that, it may not be worth the claim. So, and then we never take claims direct from the homeowner. We always will communicate with property management, cause if we took them from the homeowner, we would be taking a claim every day. You know, the last May 28th storm, it actually hit, I live in Sunnyvale, so it hit Sunnyvale. The biggest call is, we've got all these old oak trees that are been split in two. And you know, every one of them, there's no coverage. I don't care if you've got the Cadillac policy I call with Princeton. They're like everyone else. We're not covering landscaping for wind, hail, or tornado. Because look how many storms we have, and that's what's affected the rates that we have today. And I have a community, it's nice, newer community with interior sprinklers on the townhomes, and they went up $11,000. They've got one $5,700 claim where somebody hit a wall.
Wow.
Yeah, wasn't much of a claim because it's $5,700.
Yeah.
So I emailed the underwriter, like, you've got to take a look at this one. This is just way too much. But I don't know what is going to happen, because some people say, can we just have each homeowner insure their unit and their portion of the building? I mean, you could try to do that on a full-blown homeowners, but your problem is, like John said, if you've got a building with 6 units in it and you've got hail damage to the roof, what if you have only 2 units with insurance and the other 4 don't have it?
That's true.
That's your challenge.
And you gotta read that very carefully to try to make that move, because you may have to amend the documents. A lot of the declarations require levels of insurance.
Yes,
It's non-optional.
exactly.
One of the problems that we ran into on some of the older docs is the declaration actually says you will have X amount of insurance with no more than a $2,500 deductible.
So you
That
have to
went
do
away
a
20 years ago.
resolution.
That
Yeah.
went away 20 years ago, and that's in the declaration, so you have to actually physically vote to change the declaration to be able to have the right insurance policy.
Yeah, and
Not
just,
to board the property.
yeah,
Oh, wow.
if you
It-
do
it's-
manage a multifamily condo or townhome community, you never look at the maintenance responsibility. You always look at the insurance responsibility. So I have several townhomes that I write the insurance where CB built them. CB did all the documents the same, that says we cover the structure and originally constructed, but no improvements. So they would be original specs. Even though it's a townhouse, it's not a shell-only coverage. So we have to look at that. That's the determining factor. We look at the declarations, and keep in mind, all declarations have a waiver clause in there where we will, you know, the insurance company will waive going after a homeowner for causing a claim. So if a homeowner's to blame for a fire, kitchen fire, or water, the insurance company, you know, their primary, if it's a condo, they'll pay the claim, but they can't go and subrogate. It's called a waiver of subrogation. They can't go and subrogate against that homeowner, have them turn in a claim on their personal policy to get that money back.
However, state law changed 4 years ago, maybe 5, where the association board can actually back charge the deductible
Yes,
to a condo owner.
that is correct.
So that if
That's
they
your
cause,
two amounts
if
of
they
over
cause a
100,000
problem, if they cause an event that goes over the amount of the deductible,
Yeah,
then
too
they can actually back charge that entire deductible. So the HOA policy, you know, it might be that they pay $120,000, you got $100,000 claim. The $100,000 part of that on the deductible is shifted back to the homeowner, and they gotta come up with that money.
Yeah, cause I do have a prior claim a few years, maybe 2 years ago, where that was in place, and this homeowner caused water damage to her unit and the unit below. So we had a $10,000 water damage deductible, so the board charged the $5,000 deductible on the main homeowner and the other $5 on the one below.
Really?
Yeah, but
Even though they
the
didn't charge
way
property.
around all that, or the way to make the homeowner whole, is if they've got their HO6 policy, they're gonna still turn in a claim under that. And they should just be out their applicable deductible, you know, if it's $1,000 deductible, whatever the HO6 is. So, you know, let's just assume that we've got a $25,000 claim, one owner, we turn in the claim, but our deductible's 10, so we're only gonna pay 15. The only way they're gonna get the rest of that money is by way of their HO6 policy. Again, if they don't have it, then they're gonna be out, you know, quite a bit, because they can get hit with the deductible.
So with your condos, anytime an owner says, I'm covered by the HOA, your exact answer should be, there is coverage from the association on the, and I always tell them, sheetrock out. There is some stuff on the inside, it depends on what the declaration says, I haven't memorized every set of declarations. But from the sheetrock out, you need to get an HO6 policy. Actually, I even tell them, you need to get policy for your own, and I've heard it's called an HO6 policy, you need to speak to your agent. You want to throw that onus back on them to get that coverage.
Mm-hmm.
Does that make sense?
For instance, at Richard Trace with the fire, we seen those two deductibles of $100,000
That's right.
that went back on that account.
That's right. That's exactly what that was. Because those owners caused that fire.
Right.
Yeah.
If it doesn't reach the point of the deductible, the board can also make that owner pay for all the damage. Because it doesn't hit the amount of the deductible. There's no claim, therefore they have to cover it all. Depends on which way it goes.
But they can't go back and bill the homeowner because of the increase in cost of the insurance.
That's right.
The claim.
That's the negative part about it. So even if you file a claim, that's where you have to make sure you talk with your agent and
Filter
they
out
have-
the ones
They have
that-
always been good about talking with me about, do you really wanna do that? Because if you've got a claim that looks like it's gonna be $80,000 and you got $100,000 deductible, they may say, don't call it in, don't make a claim, because if you do, then it's gonna be a ding on your record and your rates will go up next year.
Could be, that's
Which everybody's rates are going up, but it would go up even more.
You might go up
potentially.
from 14% to 20%.
The one thing I wanted to touch on, you know, directors and officers liability policies are, they're just a different animal than your general liability. So general liability is based on occurrence. So if I slipped and fell somewhere a year ago and I'm having complications, I could go back and file a claim or a lawsuit
Up to 2 years.
up to, because statute of limitations is 2 years. So I could go back to their general liability, cause it's an occurrence, and say, hey, this occurred a year ago, I want you to turn that claim in. Directors and officers, it's not based on occurrence, it's called claims made, which means if you are aware of any known or pending or potential claim, which there's probably a slew of them, you are supposed to put your carrier on notice when a claim is made. Now sometimes, you know, I had a situation where, you know, we write a lot of accounts that come up April 1. Management company reaches out, Michelle, can you quote this, single family? So this property manager leaves, I write the coverage on 4/1. 2 months later, I get a call from the president of the management company, we've got to put this, turn this claim in on the directors and officers. I said, well, send me what you have. So he sends me what he has, and it's a letter saying, this is your notice of claim. And it's dated February.
Oh, no.
Prior to me writing the coverage. And see, when we get signed forms, which management companies typically do not sign the forms any longer.
That's right.
They'll get a board member.
Do
Do not sign. Our directors and officers applications, all of them say you're not aware of any known or pending claims other than what may have been formally reported to a carrier. So this guy, I'll say it's a guy, it was a guy, he argued with me. I said, this is never gonna be covered. He goes, why can't I just go back and turn it in? I said, because you've changed carriers. It's claims made coverage form. A claim needed to be made in February. When that letter came in and said, this is your,
So it sat on somebody's desk for
black and
months.
white,
Yeah.
this is your notice of claim.
Yeah.
And so now the property manager leaves. I don't know how the whole thing panned out. I said, you go right ahead. If you want us to turn it in, I can. But if you go back to them, they're gonna give you a denial. So I said, go ahead and do it. So then he calls me like 2 weeks later, and he got a denial because it was a known claim on both, Now, when your directors and officers is expiring, you may have a 30-day window of coverage still to report something such as that. This went past that window. So there was nothing, I couldn't do anything to help him. And, then you've got a property manager who didn't do their job, and, cause they were not informed that that's a different kind of policy. So remember, claims made, and if you have questions, contact your agent, filter out what they think needs to be, cause you don't want to have a situation that's small that builds into something bigger later and nobody was notified.
Yeah.
And you would need to do it within that term that the policy's in. So if the policy's in a May to May, and you know about something that's July, but we haven't done anything, you have until May to get that, the policy says you need to report it like in an adequate period of time. In my opinion, the sooner the better, but realistically, as long as it's reported in that window before it expires and comes up for renewal.
It's like,
Okay.
it's like your real estate license where they talk about disclosure. If you know it, disclose it. Don't sit on it.
Okay, if you are a community manager and you get information on a claim, in our office, what would be one of the first steps that you take? Do you have any idea?
Speak with the board.
Speak with John.
Okay.
Then he will help direct you speaking to the board. It's kinda like if you get a letter from somebody's attorney saying, I'm gonna sue you, who would you talk to first? You talk to John, because he's got the knowledge base to know what steps we need to take. Because if you only have one claim every 3 years, which is nice when you only have one claim every 3 years.
Correct.
You're not gonna think through the whole process. We don't have action items on potential lawsuit or insurance claim.
It's like I had
Action items is part of our software.
I had a board member ask the other day, have you ever gone through yada yada yada? And I said, no, we try really hard never to get there. So we don't have some of those off the wall issues where people are doing things they probably shouldn't be doing, or you're trying to clean up the mess, so.
But there again, if you get something and it shows up in your inbox or on your desk or whatever about an insurance claim or a lawsuit, either one, don't sit on it. Immediately let John know. That's where that went awry, is because probably the property manager got it in February, it was sitting on their desk, they renewed the policy, nobody ever knew anything about it, and then they're going through their stuff later going, what is this?
Oh, yeah, this
We
claim had
had-
been turned in, and just keep
Yeah.
in mind, directors and officers policies are never intended to cover claims that surround a property claim or a general liability claim, because there's more specific policies to cover that. So this guy who said, hey board, y'all renewed with this same carrier, I think it's a breach of fiduciary duty, so he files a claim. Well, that is covered, but the prior claim he made, which surrounded his fire loss, he was mad because it's a condo and we were insuring the interior, and he felt like that messed up his, what he was gonna be paid on his personal policy, cause we had to cover the original finish out. Well, his carrier said, no, you've got coverage over there, we're not gonna pay for that. Well, he just wanted everything to be replaced, so his initial claim surrounded the fire. So the carrier said, that's excluded, here it is, here's our reservation of rights letter. Then later on, he finds out, oh, they renewed again through the same carrier. He still thinks we've got the wrong policy. He sues again for breach of fiduciary duty. So we do have coverage for that, because his suit doesn't surround his fire any longer.
It's about the actions of the board.
Yes.
And I tell every board, if you serve on a board of directors that does not have D&O insurance, you should run screaming into the night. You wanna get off that board as fast as humanly possible.
We always recommend strongly that our boards have DNA.
I have had high-end subdivisions that have nice monument signs or whatever, and they opt not to get property insurance, cause they say if we ever need to, we'll just special assess everybody and everybody write a check, no big deal. Okay, fine, but I forced them into getting D&O insurance.
Yeah.
And when I explained to them that without it, their livelihood could be theoretically on the line, they're like, oh yeah, let's get that.
Y'all understand that DNO is to cover the board member if anybody says they're doing something wrong.
Within the
That they can't go
confines
to them
of-
personally.
It's within the confines of good business practices.
Okay.
Yeah, now it won't cover the board member who happens to be a homeowner too and has a dispute with their next door neighbor.
Right.
It's the
Well,
actions of the board.
It will never cover that. And, it'll cover, like, well, say the board says, let's start, the paperwork to, foreclose on someone's unit, or something of that nature. So I had this happen with Travelers. So the board hired this HOA attorney firm, and the attorney firm did not send out the proper paperwork.
Woof.
You have to have proper notices, like we're gonna foreclose on this, and your dues are in the rears, and this, we've given you these notice. Well, so because the attorney firm, the law firm, failed to do it properly, Travelers didn't have the attorney firm pay, under their coverage, because they have what we call E&O coverage. We went ahead and paid it, 30 or 40,000, because it was, the attorney firm was at the direction of the board. That's what Travelers said.
Which is honestly, we have a great attorney firm for collections, that they keep track of everything, and you can look and see where they did everything. But honestly, when it gets to the point of foreclosure, it is still the board's direction on whether they move forward on that step. So I can see why they would,
Yeah.
the attorney was working under the direction of the board.
So that was the thought process, so.
So on the big six that you call them, these are all good are important for both subdivisions and for condominiums?
Yes.
And is there any one that you would suggest that the property not get if they wanted them to cut their bill?
I mean, realistically, they could do away with the workers' comp. And then I have a property manager right now kind of arguing with me on whether the association needs an umbrella. Well, it's single family, they have a lake
Oh,
owned and managed by the HOA. And then she tells me, oh, by the way, and this is a new one, we've got a pond. I said, okay. She goes, well, the lake's far away from the home. I'm like, any body of water, whether it's a pond, a lake, a pool, or even I call it a potential liability risk, is the playgrounds. You know, playground, kid falls, and if they're a homeowner, they're gonna deny coverage. Cause, you know, you have to make sure you post signs, you know, play at your own risk, supervised, you know, by an adult. Kind of the same signs you would see at the pool. But as long as the association was not negligent, and then, you know, going back to like when we have all these storms, you know, well, if a tree breaks in half and falls on a car, that's a homeowner's car, we will not pay for that car unless our tree was not properly maintained. Because we can't be responsible for what they call acts of God. So I have had a claim where we had a dead tree, had a storm, and it fell on somebody's car.
And that's not unusual. We had that happen at Northwest one time. Big tree split down the middle and fell out on the street on top of it.
So you just gotta have to think in terms like, we have a tornado come through. If it snaps trees that are alive and it falls on cars or carports or whatever, or maybe items that's not our property, we would never be held responsible if it's considered an act of God and we've taken care of these trees. So
who would they need to go through? Their
their
insurance?
personal auto.
So like if you've got a single family subdivision and they've got iron fencing around their homes and a tree breaks, she's saying that's an act of God, and if that tree falls on that metal fencing, which it'll bend the snot out of it, the association will probably have to come out of pocket to fix that. It won't be an insurance claim.
Yeah, and then, I mean, I had an account where they wanted us to pay for somebody's damage, but the carrier refused to do it. He goes, well, show me where it says act of God. I said, well, it doesn't say that in the policy. It says for claims the association is legally responsible for. An association could never be responsible for a storm.
No.
You can't.
You can't insure God's work.
You can't.
So you think of it that way. God's
Yes.
not part of the association.
Yeah, correct. And then I probably didn't touch on this, but within the realm of general liability, we also offer a coverage called hired and non-owned auto liability.
What is it called?
It's called hired and non-owned auto liability. And the purpose of that coverage, it's if we have that coverage under the general liability, it's covered on an excess basis. So what that means is, in my 32 years, I've had one claim on this, one. Doesn't matter, you know, doesn't mean that it can't happen. So we had a maintenance guy at an apartment complex driving through the apartment complex just to check things out. A grandmother wasn't watching her grandchild. The grandchild darts out into the roadway, and the maintenance guy ran over the toddler. Toddler still lived. So what they did, they sued the maintenance guy under his personal auto. Once they just figured out he was working for this company, which happened to be a management company, then what they did, once his limits were exhausted on his primary personal auto coverage, our policy had $1 million limit that was excess. And then we had an umbrella go over that. Well, these people only wanted $50,000 to make it. They just wanted money. They didn't really sue for.
I should have said the child wasn't harmed too badly then.
Broke his pelvis, I believe. So they just wanted $50,000. So even though we had to put our carrier on notice, it never. I think his coverage may have exhausted all but 20,000. Maybe he had, I forget, 25 or 30,000 property damage or bodily injury, and then we still paid under our policy. Not $1 million, but it could have been. So it covers anybody, even like if I'm on the board and all of a sudden we realize I need snacks and drinks for a meeting, and I go get it. Then coming on the way back, I kill somebody. That's gonna be a higher than non-owned auto liability claim all day long, because it's gonna eat up my personal insurance limits. They're gonna be exhausted immediately. And then, you know, there's those layers that you have to know that. So even though an association may not have much, an umbrella is always good. Now, I know cost of things. If they don't have a pool, playground, a pond, or lake, they may not want an umbrella. But if you deal with any communities where they're higher valued units, so under D&O, if you're dealing with a unit that's $1 million value, average value, versus a $300,000 home, your D&O is gonna cost more on that community where the average value of the homes are $1 million. Because they feel like the higher valued the homes, the more potential to claim. So, there's that.
The higher non-auto, I actually did have one property back in 1997 that this happened for. And it was a small claim, but they had had a maintenance guy go to a sign shop and pick up, and actually it was an independent contractor. They went to a sign shop and picked up a rosewood sign that had been done, and on the way back from the sign shop, he got rear-ended, and it broke the sign. So they filed it under the
Hired and non-owned.
hired and non-owned auto to get the sign redone. It's a very small claim, but you know, it's in all the time that I've been doing this, that's the only time I've ever had that used.
And this coverage does cover the management company personnel.
Not to
So,
go back to what you said. Now, why did he get the maintenance guy get sued for hitting the kid?
because they said he was on his lunch break. So he wasn't really working, even though he was an employee of this management company. They said he was driving through, because he
Coming back
told
from his
them,
lunch.
he told them, well, I had finished. And even though he had finished and
But he
scoping out,
didn't, but honestly, it depends on how you look at that. Looking at it from the employer's perspective, if you haven't clocked back in, you were still on lunch, even though you were on a property.
So clocking in on
Yeah.
time era is extremely important.
to them, he's our employee, we're covering him still regardless if he's eating or not.
Mhm.
So we had coverage,
that-
so, but his policy did get,
But even if you're a great employer and say, oh yeah, I wanna cover this, I wanna help you with
You
whatever,
still
this
gotta
is,
run through the
it's
track.
still gotta go through the insurance, so insurance
his
is its own
personal
little
auto
world.
is still gonna be primary.
Yeah.
Remember, hard non-owned auto is always excess, just like an umbrella. So it's gotta touch your main policy first.
And
So,
those come in with the policies, you'll see them on the certificates of insurance. And I've fought for years because I don't know that they're really of much value, because I've only had one claim ever. But you can't get them out. It's so, you know, while it sounds like it's additional coverage, it's actually part of the overall thing. You cannot make it go away.
I mean, some carriers will allow us to go ahead and just remove it.
Really? Never had that
Depending
happen.
on who it is, and,
Yeah.
I mean, cause I think Amtrust may charge $250 a year, but if it's a small association, it hits their minimum premium anyway, and so even though it would cost that to remove it, they may not give that full amount for a credit, because it might be a minimum premium, so. Do y'all have any questions for me?
Do you think you understand the different types of policies and what they cover?
Yes.
Now you know why we have such a long list in Vantica
Yep.
of this policy does this and this, and this is why you have to update them all the time. When you get those COIs from Symphony or whoever it may be, you've gotta go in and update that information, because the first place we're going to look is that list, and see if they've got coverage. And then the second thing we're gonna do is we're gonna look for the COI. And those COIs are important because NABI has to provide those with resale certificates. So to prove up the association has coverage.
Yeah.
So all that comes into play. One of the things that you'll find out, when Michelle and her team does this really well, when your agents or when your boards say, did we bid out this property? Well, they go to multiple carriers.
did.
I mean, I have heard sometimes as many as 15, 20 different carriers, depending on trying to get stuff done. The bigger the property, the higher the value of the property, the smaller target they have. Okay? You may end up with, if you have a high cost property, they may have, 600 units is a big property.
That's big.
And so they may end up going to 3 or 4 different carriers to cover that one policy. So when you list all that in there, you're listing all those different carriers. And there'll be certain ones that they'll do 250 on this one, and they'll do 3 million on this one, and they'll do 8 million on this one, whatever. You gotta look at all that stuff, all that information in there. Michelle's team is really good about helping you walk through those questions.
Okay.
But they
Thank you
do,
very
if
much.
the question ever comes up from the board, did we bid this? Yes, it went out to multiple carriers.
And
Well,
sometimes,
what they're really asking you is how many agents looked at it.
Oh.
But that's actually irrelevant.
Yeah, it
Correct.
doesn't matter, I mean, you can have this agent from this company and this agent from this company, but if they're going to the same,
we're all going to the same markets. Now,
If there's only 4 people that will carry an $8 million policy, they're all going to the same 4.
yes, you just have to choose who do you wanna work with.
and that's a misunderstanding a lot of times in boards, because they think about, okay, they called Farmers Insurance, they called State Farm, they called this one directly for their personal insurance. The agent is doing that for us. They're contacting all the carriers. It doesn't matter how many agents we call, they're gonna call the same carriers.
And if you ever get an agent that says, hey, I'll be glad to get you a price for this, I just need you to sign a change of agent record, don't do it. Because that means they're going to the same place that our current
They're
agent's
just
already gone.
taking our work away. So,
So you don't want to do that, but one, because you want to keep that relationship with the one that you've been working with,
Right.
but they're gonna go to the same place. They're not, the only way the price gets cheaper is if they're cutting their fees.
Right.
In our current society, I'm not seeing that happen too often.
and we do have Princeton that, there's another Texas agent that has Princeton, but as a rule, they do not have 30 agents in the Dallas-Fort Worth area. So the chances of someone else, our competition going to Princeton like I've done or whatever, is pretty slim, depending on, what account it is, if it qualifies or whatever. But we do have a new program, which one of my competing agents, I was surprised didn't know about. So, we're always trying to get new programs.
And that was the next thing I was gonna say. While I try to do almost all my work with Symphony, I like to have one phone call to be able to fix all my issues. And so that's always where I go. There's nothing wrong with hitting up other agencies, because they may have a relationship with a carrier that Symphony may not.
True.
Years ago, Symphony hooked up with a deal, and actually it was before they changed the name of Symphony. They hooked up with a group called Republic. And they were getting great stuff from Republic, and they were the only ones in DFW being able to hit that carrier. So we were getting some great numbers, and then suddenly Republic went away. But you never know if you don't ask. They may have this one guy that's over here that's doing his thing, and he's got a connection with somebody that nobody else has. You don't know, so there's nothing wrong with asking. But keeping, the moment they ask you about doing a change of agent record letter, that just tells you they're going to the same places that your other agent's already at, because they can't get in there to get the information.
It's called I'm blocked. So,
It'd be like you coming up and asking me for the key to the office. We both work at the office, and I've got a key, I can get in. And, well, I don't have a key, well, let me borrow your key. No.
yeah. So if I send a submission, if you give me, a supplemental, which I can send to John and he can distribute, but you give me an account that I need to work on, and I go to all these markets. If I'm blocked anywhere, they're gonna tell me, oh, you're blocked. That means another agent has gone to that same, and we use what we call wholesale brokers. So if it doesn't fit in the realm of like a standard carrier, like Travelers, Philadelphia Indemnity, if I've gotta go to an excess market, even though Princeton is an excess market, they're still A+ rated. It's a good policy. You go to these wholesalers and they write through all these different markets, but I've got one right now, it's kind of an old yucky condo association. I went to 2 different wholesalers and I got so many different quotes from both, and ended up going with this other guy. I'm like, okay, I'm glad I went to you. And see, they all have 30 carriers each. So they're kind of the middle person between us, the client, and the insurance company. So,
What is one thing you have to remember from all of it? Well, there's a couple of things actually, but one thing you have to remember from all of this is we are not insurance agents.
Right.
We do not have that expertise. So anytime you are talking with an insurance agent, you're getting bids, if the board asks you a question, you don't know how to answer, that's what they do. So that's what they're there for. Send them a quick email. I got a board that asked me this question. How does that affect our insurance? Remember, that is not your job. Our job is to help get insurance in place, but it is not our job to be the expert about insurance. You have lots of tasks that you have to do, and insurance is just one of them.
Our contract states that we will cause insurance to be placed. What that means is the company, the board selects the carrier, and then we call Michelle and say, buy the policy.
Okay, and then the other thing you have to remember is you are never to sign anything personally regarding insurance. If you're having a problem getting a board member to sign it, get with John, cause he will get the board member to sign it. We as Junction do
Also,
not
point
sign.
blank, if you don't sign this in the next 48 hours, you ain't gonna have any insurance. And they'll go, oh, okay, here you go.
Yeah, so those are the two key things that you need to keep in mind of this. But remember, it's great to build a relationship with an insurance agent that you can go, I got this question.
When the fire happened, the fire, as we will always forever call it, I was on property and I called Jeff. And I called him on his cell phone at 7:30 at night. And I said, definitely gotta get a claim started. And he goes, okay, I'll get it taken care of. I didn't have to worry about it from there on out. I let him run with it. I got a call from an adjuster. I got all this stuff done. It was one phone call. This is what I'm saying. If you've got one place, one-stop shopping, you don't remember who's carrying the policy on that one, and do I have a contact person? Do I even have their phone number? You know, all of that stuff is a mess. So being able to have someone you can depend on is huge. We're setting this up. I asked Michelle, because Jeff just recently retired. So I asked Michelle, says, who's the person I call now? And she goes,
and we have new people too.
Yeah.
This is the first time probably in 20 years we've been fully staffed, but
yay, knock on wood.
I know, so.
But yeah, when that fire happened, it was an important deal that we worked through it because the carrier, the way things were written up on that deal, it was a mess all over the place. And the relationship with the agent was huge. The carrier tried to run what was called the statements of value on the property, which had been executed and signed as agreed on the statements of the deal. But the COI on it said blanket insurance coverage of $4.2 million. They were only trying to pay 1.1.
Yeah, blanket coverage is the best.
Yeah, and
'Cause
so,
you get the big bucket limit and you're not limited to a certain amount per building. Now, they may have it listed how much value is each building, but they put all that together, so if you have 4.2 million and we have to rebuild a building that caught on fire and say the statement of value says it's 1.1, but it costs 1.8,
3.8.
whatever it is, if it's blanket, they have to pay it. They have to you get that $4 million limit to float regardless. Now, that's obviously sounds like it was underinsured.
Well, it wasn't underinsured, they just didn't wanna pay the blanket. And so
okay.
I called Jeff, and Jeff's like, I said, what am I missing on this? What am I misreading here? And he goes, I'm reading the same way you are. His blanket is blanket. And so he actually wrote a letter to the adjuster for me and said, get your head out, dude. You know, this is a blanket policy, it's got coverage. And the carrier still denied it, and they ended up suing the carrier over it.
Wow.
But the agent, and Jeff told me very clearly, when you're having difficulties, contact your agent, that's what we're here for. As Sherry said, they're the experts in insurance, not us. We don't have, I say this all the time, you don't have to know everything, just to know enough when you're getting lied to. And that's when you pick up the phone and you call an expert. Okay? Having those relationships are important. I've had a relationship with Symphony since 1996. So having a long-term running relationship is important.
And if I don't know the answer to something, I will tell you, because again, I'm not an adjuster. And there's gonna be some areas that are gray, that, well, it could go this way or it could go that way, and I may tell you, but if I don't know the answer definitively, I will pick up the phone and find out. Because I think you should be able to say, I don't know the answer to this one, because I have one of those right now, it's a little bit iffy. Just remember, like, if you have foundation that's damaged, we do not cover the foundation unless it was damaged by a fire or a tornado. But
And
if it's our
sometimes the
Texas
carrier won't
weather,
give you the foundation, so.
yeah, if it's Texas weather, and be mindful if you have any communities on condo or townhomes that are older than 20 years and they could be subject to city code upgrades, need to visit coverage that they can have is called ordinance or law or ordinance. And that pays, you know, like my tornado claim for the property on Royal, built in the 60s. So we had $1 million coverage. They used a little less than half of that. Because now, City of Dallas says, these buildings have to have interior sprinklers. If they didn't have the ordinance or law coverage, that would not be covered. It'd be an out-of-pocket expense.
At the fire, we had ordinance and law, coverage, we also had landscape coverage. And so we got money for landscaping, but we also got $250,000 put in the sprinkler system. Because now
Good
it's
deal.
required, but it's small things you don't even think about. Under law and ordinance, the height of the switches. You know, it used to be up here, now they gotta be lower, that's extra distance in wiring, so that's extra material. That's different than what you had, remember, original says original, that extra 6 inches, somebody's gotta pay for. The fire sprinkler, it had to be covered. We had to redesign the units to fit ADA. So that law and ordinance.
And still try to keep the same
And
square
still
footage.
try to keep the same square footage, because we couldn't make the buildings any bigger. The units were designed in the declaration to be X number of square feet, we had to build them back at that same square footage and still get ADA to fit. So law and ordinance came into play. Also, the relocation of the
Breaker panel?
breaker panel.
Yes.
Cannot be in the closet anymore like
No
all the
more.
old ones are, they gotta be out where you can get to it quickly. So it's ugly as sin where they end up putting them half the time.
The city
But-
will not let you have that,
Yeah,
a breaker
that's-
panel in the closet.
No, but
So
that's,
that's why
that's
they're
a-
on the outside in Richmond.
but that's why you get law and ordinance coverage, okay? Symphony's done this long enough, they know that needs to be in there. You can ask them, and you should ask them when you get a policy, does it have landscape and law and ordinance?
Well, now it's not gonna have landscape, we learned that, it's not.
For fire, they would.
For fire and lightning, it would be, probably have a small amount of coverage. It would be not significant to help an association.
Well, we had a fire up in Plano, and the landscape paid to put back all the bushes that got burned up and trampled on by the fire guys. So,
Oh, okay.
yeah, because they're just tromping right through them, they're throwing stuff off the roof, they're cutting holes
All the
in
water
roof.
damage and stuff
Yeah.
that they're doing.
They're hitting it with 800 PSI or whatever, and they're blowing those poor bushes right out of the ground. So, but you wanna make sure that's, and again, Symphony knows that stuff needs to be in there, but it's your job to verify. So asking the question is important.
Yeah, look at your properties before a claim happens, because, agents are not perfect. There could be some things from the past that, from one agent to another, needs to be revisited. We try to increase the values every year, I would say the biggest challenge we have is not knowing the amount of coverage we need for a monument sign, a brick wall, those things. 'Cause, we can plug in a building online and say, come up with an estimated replacement cost. We don't have that tool for amenity items. So if there's any way you can figure out how much those need to be covered for, like a playground, we need some good values on those.
So if you put a playground in 10 years ago that cost $10,000, your value on it should be a minimum of 20. Remember, time value of money. Value of money doubles every 10 years. Okay?
Okay, well, thank y'all for
Anything else?
having me.
Thank you.
Thank you.